All right, welcome everybody here at Mamba Mortgage with my man Jared Shore. We're going to be talking a little bit about DSCRs today, something that is really, really powerful. Okay, my short introduction here: the man, the myth, the legend himself, Jared Shore, extremist in golf. This guy can pitch at least 97 miles an hour.
Oh, yeah.
It may be on the Wii. We don't know, but he's got some skills to pay the bills, to say the least. Jared, any statements on your gifts there?
I mean, that's a pretty bold introduction there, and all of it's 100% true.
Yeah.
And so, I'm excited to talk some DSCR loans with you today.
Love it. All right. Well, so do you want to tell us a little bit about Mamba Mortgage first, what we do, kind of what our goals are here?
Yeah.
And then we'll jump into some of these questions based on the basics of DSCRs and then kind of go into a rundown of them.
100%. Yeah, so Mamba is really based off of, we are a full service broker. There's not really much we can't do. Our goal is to have as many tools in the toolbox as we can to help as many clients as we can. But our origin story was really based off of investor loans.
Yeah.
And so that is really what I personally love to do. And that's kind of, when I started Mamba, that was the goal, was to help investors. And it kind of grew into primary residence, commercial, even at this point, land loans, HELOCs. So there's a lot of things that we can do, but what I personally love to do, and I think that's why we're talking today, is really the investor side of things, the fix and flips, the DSCR, the Airbnb stuff, and so really just honing in on that a little bit. But in the big picture, 30,000-foot overviews, we do a lot of different loans, and we're really good at a lot. But what I personally like to do is the investment side of things.
No, I love that. I think it's such a unique strategy in being able to fund things, right? A lot of people say it follows the money. And so when understanding how the money can be used to be able to invest better, being able to build sustainable wealth and generational wealth for your family is so powerful. So let's jump right into kind of some of these DSCR questions. So first, can you tell us a little bit of what is a DSCR and how is it different from a traditional mortgage?
Yeah. So DSCR is an acronym for debt service coverage ratio. And really what that is, it's a mathematical equation, and it's a simple equation. You're just taking the rent on the property that you're going to be getting and divide it by your mortgage payment, including your taxes and insurance and that. And so if anything above a 1, you're cash flowing. Anything below a 1, you're not cash flowing. So the example I always give is, if the rent you're getting is $1,000 a month, your mortgage payment's $1,000 a month. 1,000 divided by 1,000 is 1.
Okay.
So a 1 ratio means you're breaking even. You're not making money. You're not losing money. Anything above that 1 ratio, you're cash flowing. Anything below that 1 ratio is a negative cash flowing property. And there's actually uses for negative cash flowing properties as well. We maybe not get into that today because that gets a little complicated.
Yeah.
But that is the ratio we're calculating, and depending on what loan we're doing, there would be a ratio you'd have to hit to be able to qualify for that loan. The difference between that and like a conventional loan is we're using that as your income.
Okay.
Whereas more of a conventional style loan, we're using what you make every month from a personal standpoint, your W-2 income, self-employed income, 1099 income, whatever that may be. We're using that to calculate, an overall debt to income ratio. Yeah. That DSCR ratio is your income that we're using, and we're not looking at anything else except that.
Yeah, that's extremely powerful. The ability to use the asset or the property specifically to be able to get lending for that is incredible.
Yep.
Right.
I joke around, like, we don't even care if you have a job.
Yeah.
You could be a bum on the street, no job, as long as you've got a credit score and assets, you're probably going to qualify for a DSCR loan.
That's awesome. So what's the best clientele, if you will, for a DSCR?
That's a great question. It could be for a lot of different people, but probably the most ideal person is one, self-employed. We deal a lot with realtors who are self-employed, and if you're self-employed, the great thing about being self-employed is you get to write off a bunch of taxes, right? Yeah. And so the idea is that you don't want to pay a lot in taxes. The bad part about that is, on paper, it shows you don't make a lot of money,
right.
Even though we know you do make money. And so if you're trying to qualify conventionally for an investment property, these are investment property specific only loans, and your income doesn't support a conventional loan, DSCR loans are really designed for those professional investors and or self-employed borrowers who can't qualify, with traditional income.
Okay.
But those would be more the ideal people and companies. The other nice thing, they can close in LLCs.
Okay.
And so if you're trying to scale, this would be, somebody else that would be an ideal person. Is you're an individual, you're not self-employed, maybe you're a W-2 income type borrower, but you want to buy 10, 12, 20 of these things and do it in an LLC. Well, you can't do that conventionally. So this allows you to scale. It keeps it off of your, kind of personal credit report. And so there's a lot of reasons and I guess people that we would lend to on a DSCR loan.
Awesome. Okay, so is there anything different, I guess, from a conventional loan that we're going to need documentation-wise? All right, what would be the difference between those two?
Yeah, a lot of the same documentation in terms of property stuff. Really, the big difference is going to be, one, we don't look at income, like I just mentioned. So we don't need any tax returns. We don't need W-2s. We don't need pay stubs.
Okay.
On the flip side, we are going to need LLC documents if you're closing in an LLC.
Right.
And so now you've got, your articles, your operating agreements, your certificate of existence, some of those type of items that we're going to need. Really, there's not a big difference in terms of documentation. It's just a little bit different documentation.
Okay, awesome. Okay.
Now, I will say one of probably the biggest advantages from a documentation standpoint, depending on which lender we're using, is if you're going conventional and you own a bunch of properties, we need documentation for every single property that you own. It gets a little bit tedious now. So if you are somebody who has a lot of properties, be organized. It will make your life easier. It'll make our life easier. Most of our lenders, though, it's property specific. And so if we're dealing with one property, we really don't care about the other properties. We just want to make sure that this property is good.
Okay. So what would you say for the investor world are the most advantageous things for them specifically? So what are the biggest advantages more so of what they can use it for? Obviously, you had mentioned kind of scaling being a big portion of that.
I think probably the biggest advantage with this type of loan versus others is the being able to close in LLCs.
Yeah.
And from a risk perspective, and every investor we talk to is a little different in what their risk threshold is. We see some investors that close every single one of their properties in the same LLC. We see some others that do series LLCs. We see some that create a brand new LLC for every single property they borrow, that they buy. So it gives you some flexibility in how you can hold these properties. But also again, if you are let's say you're going to buy a primary residence later down the road, it keeps this off of the risk of your primary residence. And so there's no debt to income ratio, hits that you're going to take if you're using a DSCR loan.
So in golf terms, this is providing a handicap.
There you go.
So for me, I need a lot more help in golf so I get a way higher handicap versus Jared here is like, hey, Kurt, can you just come on and bring the food with you, brother?
Yeah.
So big, important part of it. So let me ask you this, because this is an area of passion for myself.
Yeah.
How can we use a DSCR on a place like an Airbnb, short-term rental, VRBOs?
Yep. Yeah, so same ratios.
Yeah.
Same exact DSCR ratios we just calculated. It's just how we're calculating the income. And so things like AirDNA, the appraiser is going to help us out, right, and give us kind of a market rent analysis of that property, and making sure that where that property is located, things like that can help us dictate, what the real monthly rent is going to be on that property. Like there's the real rent and then what we think the rent's going to be. And sometimes they're one and the same, but sometimes they're wildly off. And so just utilizing all the tools to be able to calculate that monthly income correctly.
Yeah. Now, would you agree, though, that when we're calculating a lot of those properties, ideal situation, we want to prepare it as if it's a long-term rent. That way, we also have several different exit strategies for folks and put them in the best place possible.
Yeah, you definitely want, you don't want to trap yourself into one, a corner where if the Airbnb market just crashes and you're banking on that, like you got to have an exit strategy with that. And so one of the things I always do is if we can qualify that property with long-term rents first, one, you're probably going to get better terms on it. And then, what you do after the fact, if your plans change and you want to turn it into an Airbnb, great. That's icing on the cake. And I would think most investors, if they're going the Airbnb route and for whatever reason they can't rent it out short term, they're probably going to put a long-term renter in there, to kind of alleviate their risk on that. So that's kind of my strategy is let's at least qualify it off of long-term rents to make sure you're okay long-term. And then if you can put a short-term tenant in there, maybe it's a nurse or maybe it's a true Airbnb. Great. That's icing on the cake.
Yeah. For us, we love, for my investment properties, I guess, we love looking at it as, okay, can we use this property for what we want to target, which our target is mainly kind of medium term. But being able to have that flexibility of saying, okay, we want to be able to, at the very least, put a long-term tenant in there. And then again, if we're hitting our bread and butter, which is for us, we love contractors. Those are our favorite people. Oh, they do amazing. But if we can do that, man, it takes us to a whole nother level. So I love that. Such a powerful tool. It sounds like there are a ton of pros, specifically, obviously, for investors. And really for people that are just trying to get into the game too, from a standpoint of, like, again, credit is going to play a role. And so we want to make sure we're working on having good credit, putting ourselves in the best spot possible, right? But it's also a way to make it so it's not dependent on your actual income. So I've heard of a lot of stories of teachers and, people who work at Meyer and different places who are like, man, I don't know if I can be an investor. And I'm like, wow, again, saving money, building credit, it is possible for anybody. I mean, I'm personally just an average Joe, right? So why can't anybody do it?
100%.
I think that's just so powerful. And Mamba does a great job with that too.
Well, and I should preface too, like, if you do have the income to qualify for a conventional loan, like, let's look at that too. Because they can be powerful. Conventional loans are powerful tools. They're a little bit cheaper sometimes, or they've got better rates. So if your income supports a conventional loan, now you've got options. Right. And so I think, I don't want to,
put it just to a DSCR only. So
DSCR, in my opinion, is the best way to do investing. But man, back in right after COVID, when rates were really low, everybody was doing conventional loans for their investment properties because the rates were so great. And then once the rates went up, kind of switched over to more the DSCR style loans. So again, it's one of the great things about us is we have tools in the toolbox. We can wherever the rates go, wherever it makes the most sense for the client, we've got an option there for them.
Yeah, I think that's incredible. And one thing I can actually speak very personally about Jared is his ability to be a solution finder. And again, this team here in general, we're solution finders. It's, if you have a question, right, come ask, because more than likely we have an answer, or we know somebody who does, right? So we're going to put you in the right spot at the right time. And again, preparing long-term, right? That's the goal, is how can we prepare you financially to put you in the best spot so we can help you grow as an individual, as an investor, even getting your first home, man. And how powerful is that? So we love it. If you guys have any questions, please reach out to Mamba Mortgage here. I'll put some description stuff. First time doing that one. I'm going to put some stuff down into the description for our contact info so you can reach out. Even if you just have questions, basic questions like, hey, how in the world do I start this thing? And again, the DSCR stuff sounds really cool, but maybe I have a question about XYZ. Please reach out about that, because that's what we're here for. We want to continue to help more people. And again, we service across the United States, which is a very, very powerful thing. So please reach out. And again, if you guys have questions, please reach out to us. Follow us at Mamba Mortgage. And Jared, what else you got to close us out here today, brother?
Man, I think that's it. Yeah, if you've got any type of property you're looking at, whether it's first time home buyer, fix and flip, refinance, whatever it may be, let us know.
All right. Yeah, I love that. Thanks, Jared, so much for your time today, brother. All right.
Awesome.
We'll see you guys on the next one.